It doesn't ultimately affect the value of the company, which is really a projection on how many cars they can make, at what profitability level, and what does that translate into cash flows. But it does affect investor sentiment. I mean, everyone knows that Elon is not your archetypal CEO for many of the reasons that you cited. But he is a genius. He has been a disruptive force in the global automotive market. And investors have to weigh that. And at some point, some will say, these are too distracting to us and to the companies, and we worry about that, and they will sell their shares. And I think that's what you've seen over the last month or so since the take private. Between the accusations of the Thai rescuer, the continued tweeting, the podcast last night, the tweet while driving about take private, collectively, investors are saying the risk reward associated with these distractions is not worth it, and that's why you're seeing the stock sell off. Now, ultimately, the stock will be measured less by Elon's behavior and more by what are the cash flows and deliveries of this company going forward. And that is, as a financial analyst, what we look at most closely.
Gene, one of the other things that I think investors should be keeping an eye on today are the bond yields. We saw the 2025 Tesla bond spike to a high of 8.89%. We got that convertible issue that's due in February, which I think stock price has to hit 360 for that not to translate into more cash for the company. How closely should investors be watching that side of the equation as well?
I don't think they should be focused as much on that side, the bond yield side of the equation. What they should be hyper focused on is what the demand is for Model 3. And as Tony talked about, this is really going to come down to the fundamentals of Tesla. Can they, and if you boil it all together and look at all of the moving parts, it comes down to, do they have enough demand to support 60,000 plus vehicles at a 20% gross margin? If they can do that in the next few quarters, they're going to be profitable, and the yields on those bonds will change, and the stock will be $360, and they can replenish some of that debt with equity. And I think we are at what we could call escape velocity. But I think that is probably the critical question that investors need to ask. As we think about that question and try to be measured around the circus that's going on today, and a deserved circus, our conclusion is that, in fact, demand for Model 3 continues to be robust, and they are making progress on production and profitability. And so if you want to think about those bond yields and think about the September quarter in context to that, I'm reluctant to say this, but Elon Musk's seemingly relaxed behavior probably is a sign that the September quarter is going to be fine. Now, that's not going to get investors comfortable that he's going to be profitable for 2 or 3 consecutive quarters.
Right.
They will continue to have some doubt, but I think that is a positive sign.
Yeah, so maybe it's Irie for Tesla investors. Tony, the most concerning thing perhaps that I saw as far as what Tesla investors might be looking at is news about the Mercedes-Benz EQC due in 2020. Its range seems competitive with Tesla. If they can deliver that, doesn't that sort of competition, perhaps brand-wise, competition-wise, create more of a concern for Tesla than Elon Musk's samurai sword handling skills?
Look, I think there are 2 schools of thought around competition, and we may be counter-consensus in our view. But my belief ultimately is that we are in the very early innings of EV adoption, and additional entrants into the market will validate it. So we believe that electric vehicles will go from about 1 million units sold to about 60 million units sold per year by 2050. Over the next 18 or 20 years, we think unit growth will be 20% per year. So Tesla arguably, and it only has 10% share today, Tesla could maintain share or even lose share, and there's lots of room to grow. And I think ultimately it's better to have 10% share of a huge market or 5% share of a huge market than have 40% share of a market that doesn't have critical mass. And so I ultimately believe that Tesla has had a first mover advantage largely around brand, that they've become synonymous with the EV category and having a compelling, attractive product, much like Apple was with the iPhone. And so I worry less about competition. I actually believe that it validates the market. And if I am a traditional BMW owner and I walk into the dealership, or a Mercedes owner, and ultimately they have an electric vehicle and I drive it and I think, wow, this is a totally different driving experience, that may make me go look at other vendors who have electric vehicles, including Tesla. And I think the challenge for the incumbents is the market is going to move to EVs, and they need to have EVs to hold their customer base, or their customer base is going to move. And ultimately, I'm not so sure that competition will be the death knell that some are proclaiming for Tesla right now. Really?
Do you think that they're just the sheer logistics of manufacturing, do you think they have any advantages over Tesla? And in terms of the supply issues of getting a car to a driver who wants to buy one today?
Yes. I mean, look, Tesla has shown in spades that they've struggled to manufacture at a predictable rate, certainly within their own targets. And Elon has conceded multiple times that it's been hell and very difficult. And I think there's a real question also downstream about whether the cars will have sufficient quality. So you will have very credible manufacturing competition. Again, that said, we're talking about comparable cars only beginning to emerge in 2020 or 2021. And even the Mercedes vehicle, we believe, will be priced a lot higher than the Model 3. So there are very few to no really announced Model 3 competitors before 2021. So Tesla has a 3-year lead, and they may have factories in China and other places, and they'll have 3 more years to hone manufacturing. So I'm less worried about, competition will come in and have a better product and be able to make it more reliably, because we're really talking about 3 years from now until we have something that matches the performance, styling, and most importantly, price point. Because the announced vehicles to date, including the Jaguar I-Pace, including the Mercedes offered earlier this week, likely Audi next week, are all at notably higher price points than the Model 3.
Gene, just want to get your thoughts here on leadership, and given some of the comments from Musk last night as well around the fact that I think he considers himself more of an engineering guy, that more of his attention is actually spent there than the business side of the equation per se, and to sort of use the word you just used before, the circus, in terms of the latest round of news in general today. Does this just contribute or add to the need for this company to hire a COO or another such person?
Undeniably, it contributes to that. As someone who has been a big proponent of Elon trying to measure his behavior on social media and wanting him to do that and him not doing that, I'm becoming more of the belief that he is going to continue this unconventional PR path. And I think that the issue that you have with that is that does kind of deepen some leadership questions. So I think we need to assume that he's going to continue this type of behavior.